So I did it. I sold MSTY and I sold MSTR. All of it. And I moved the capital straight into Roundhill's brand new ETF, MSTW. Now, before you think I've lost my mind, let me walk you through exactly why I made this shift. Because if you're holding MSTY or even the MicroStrategy stock itself, this might be a serious turning point for your income strategy. Let's back up for a second. If you've been following the high-yield ETF trend, you've probably heard of MSTY, the Yield Max MSTR Option Income Strategy ETF. It exploded in popularity for one simple reason: the yield. Currently, MSTY is throwing off monthly income at 150%. It pulled this off using a covered call strategy on MicroStrategy, the publicly traded company that acts like a Bitcoin vault. On paper, that sounds amazing. You're getting monthly income from a volatile stock without having to hold the stock directly. And it worked for a while. I mean, the monthly payouts were impressive, sometimes topping $2 per share in 2025. Then there's MSTR, the actual stock. MicroStrategy has become infamous for buying and holding massive amounts of Bitcoin. When Bitcoin goes up, MSTR explodes. When Bitcoin crashes, so does MSTR. Holding the stock is like riding a roller coaster, only without a seatbelt. And yet, both MSTY and MSTR were in my portfolio. Why? Because I wanted both the upside of Bitcoin through MSTR and the monthly cash flow of MSTY. But then, MSTW dropped. Out of nowhere, Roundhill launched a new ETF, the MSTR Weekly Pay ETF, ticker symbol MSTW. It trades under the radar for now, but if you've been watching closely, it's got the potential to completely change the game. This isn't just another Bitcoin-adjacent income ETF. This is a fund that aims to combine the income strategy of covered calls with weekly payouts. Let me say that again, weekly dividends. That's 52 paychecks a year from one ticker. MSTW was officially launched at the end of July 2025, and just a few days later, Roundhill announced the very first distribution, 85 cents per share. That's not a typo. Closing price on 1st August is $43.44. That works out to a 102% annualized yield. And this isn't a guess, this is based on actual distributions. It's a real number. You can check the data yourself. Now let's do the math on that for a second. If you held just 100 shares of MSTW, that's $85 in income per week. Over the course of a year, that's more than $4,400 in passive income from a $4,344 investment. But let's take it further, the way I did. What happens if you put $100,000 into MSTW? At $43.44 per share, you'd be holding about 2,302 shares. Multiply that by the weekly payout, 85 cents, and you're getting about $1,956 per week in income. That's a stunning $101,000+ per year if that rate holds. That's almost identical to the ETF's listed 102% distribution rate. Now, I know what you're thinking. Wait, didn't MSTY do something similar? Yes and no. MSTY paid monthly, not weekly. And while it did offer strong payouts, those distributions fluctuated a lot. Some months were amazing at like $2.37 per share. Others dropped below $1.20. Plus, MSTY is more directly exposed to option strategy slippage over time. That monthly reset cycle can sometimes clip the upside if volatility shifts. MSTW, on the other hand, offers weekly resets. That means more frequent opportunity to capture premium, react to price movements, and maintain a smoother income flow. And here's where MSTW really wins: the construction. MSTW is built with a 73% allocation to MSTR, 15% in MicroStrategy convertible bonds, and the rest in T-bills and cash equivalents. That's a much more balanced exposure compared to MSTY, which is fully focused on MSTR's price action and volatility. This diversified construction means you're still capturing the essence of MSTR and Bitcoin exposure, but with a touch more stability. And here's another huge plus. MSTW is managed by Roundhill, The same company behind some of the most innovative ETFs in the market right now. They're not new to this game, and they've clearly built MSTW with income investors in mind. But let me tell you the real reason I made the move. It's all about income frequency and consistency. Look, I loved MSTY for its monthly payouts, and yes, I held MSTR for the asymmetric upside, but what MSTW brings to the table is predictability. Weekly income means I can plan cash flow more tightly, reinvest more frequently, and stack income on a tighter compound schedule. There's a psychological benefit too. Getting paid weekly just feels better. It creates a rhythm to your portfolio. It's like a paycheck. You can map it to bills, reinvestment, or simply treat it as lifestyle income. Now let's talk risk, because this isn't all roses. MSTW is still tied to MicroStrategy. That means Bitcoin volatility is still your shadow. If Bitcoin falls hard, MSTW's NAV will likely drop too. You're not getting out of that risk, and you're just getting paid more frequently while taking it. Also, this ETF is brand new. As of now, it only has $26.45 million in assets under management. That's a baby in the ETF world. But it's growing fast. If these payouts remain consistent, MSTW could see inflows explode over the next few months. And of course, this is not capital appreciation territory like MSTY. MSTW uses a covered call strategy. That means you're trading upside potential for income. If MSTR doubles in a month, you won't capture that entire gain. You'll still get your income, but your price may not move much. But that's a trade-off I'm okay with, especially since my goal here isn't doubling my money overnight. It's building reliable weekly cash flow. So, what's the downside of holding MSTY and MSTR in this new world? For MSTY, the biggest drawback is lower frequency and less control. Monthly income is fine, but weekly is better. And MSTY hasn't always been consistent in distribution size. If the premiums dry up or MSTR flattens out, you'll notice the drop. For MSTR, the downside is no income at all. You're in it purely for Bitcoin exposure. And unless you time it right, you could be sitting on 30-40% swings with no cash flow to offset the risk. That's why I sold both. MSTW gives me what I actually wanted from those two combined: Bitcoin exposure and passive income. But in a smarter, smoother, weekly format. It's early days for this ETF. Things could change. Distributions could drop. Assets might grow or stagnate. But right now, it's the cleanest vehicle I've found for weekly cash flow tied to crypto volatility. And if you're someone looking to build a true cash flow portfolio, especially in this new world of high interest rates, volatility, and asset churn, MSTW might just be the strongest new player on the board. That's why I made the move. That's why I sold MSTY, and that's why I sold MSTR. This isn't financial advice, but just my journey, my decision-making, and my reasoning. But I hope it helped you see what's changing out there. If you found this helpful, make sure to hit that like button and subscribe to MoneyStick Unfiltered, where we break down faceless finance into real, raw ETF strategies. Weekly videos, honest insights, no fluff.